Thank you for attending our home buying webinar presented by Provident Credit Union. Our session today should last for an hour with Q&A session at the end. During the presentation, you'll have the ability to send questions to our webinar staff through the questions pane. Simply type in your question and click send. We'll address all Q&A at the end of today's session, and a copy of the slide deck will be emailed to all attendees in about a week. Our first presenter is Fatemeh Sangabi. Fatemeh, would you like to introduce yourself?
Good afternoon, everyone. Thank you for making time and attending our home buying webinar today. I am one of the senior mortgage consultants at Provident. I've been here about 25 years. I've worked with the first-time home buyers as well as the step-up home buyers as well. Today, we're going to review some fixed-rate mortgages, adjustable mortgages, and how we can assist you with the pre-approval process. And walk you through the home ownership goals.
And our realtor is Michael Mendenhall.
Good afternoon, everyone. My name is Mike Mendenhall. I'm a full-time realtor. I've been practicing real estate in the Bay Area for just short of 47 years, and I'm lucky enough to be brought in by Provident to express the real estate portion of our presentation today. And I'm equally lucky to have Fatemeh because she is an awesome loan professional, and she is the first person you should contact after today's webinar. Thank you. Our goals today. First one is to assist you in understanding mortgage financing options. That will be Fatemeh. Help you define your ownership objectives and how to achieve them. We'll be walking through the home purchase today. Demonstrate how you can buy a home for the best price with the most favorable terms. We'll talk a little bit about that and how to achieve that. Guide you through the home buying process. We're going to do a fictitious home search and purchase today. Help you understand what to expect when your offer is accepted or once you're in escrow. Okay? The steps. Here's the stepping stones of our today's presentation. First one, educate yourself about home buying, apply and obtain a pre-approval, summarize your costs, work with a professional real estate agent, building your home search, find a home, and then making an offer. We're going to walk you through all those steps today, okay? Fatemeh.
Of course. We are one of the largest credit union in the country. We lend in California, and we're one of the sound credit union. We're strong. We're a portfolio lender, and we are the CTA credit unions. That's how we started our credit union, the Teachers Association, and we have expanded it to the whole California, as I mentioned. We have 1,200 employees and employer groups and maintain branches, especially in the immediate counties of the Bay Area. And again, we're one of the largest credit union, sound credit unions. Next, please. Why choose Provident? We are your local credit union. We always try to bring you the best offers and rates with the mortgages and other products as well. We do have some unique loan programs. As we come to discover what meets your needs, we'll review the options. We offer movable mortgages. We have a power funding. That means once you have your pre-approval for Provident, we have verified your application, and technically you can make an offer and we can close it within 15 days. That's technically 10 business days in real estate terminology. We do have first-time homebuyer programs. And again, as we come and discuss the different loan products, make sure what meets your needs, and we'll take care of it and take care of you. When you apply for the pre-approval process, I'll invite you to complete an application with me. And then based on that application, we'll ask for the supporting documentation. If you're a regular employee, salaried, W-2, we're going to ask for 1 full month current pay stub, your last 2 years of W-2s, and your asset information for the past 2 months. If you receive any bonus commissions, RSUs, we'll ask for the past 2 years history. And as far as the your year-end pay stub, so we can average those incomes as well. If you're self-employed or over 25% ownership of a business, we'll ask for the past 2 years of your complete tax returns as well. As of today, I want to say probably you don't want to be closing any credits, any credit cards. A lot of people, they get into the mode of purchasing homes and they start cleaning up. They think they're cleaning up their credit. They start paying their credits to zero, and they start cutting up and closing their credit cards. As of today, you don't want to do any of those. You don't want to close any credit cards. You don't want to open up any credit cards. When we come together and discuss and pull your credit, we'll review what needs to be done to qualify you for the possible next level qualification. And if there is nothing to be done, then we rather you have the cash reserves. So please do not open up any credit cards, do not close anything until we come in connection. As far as assets, please do not move any of your assets from one account to the next to show us where the down payment is coming from. Leave them where they are. We need 2 months of 60 days off your credit, your asset information, and money should not be moving, or we need paper trail on them, and we'll get to those as well. For the down payment, any amount that's yours is great. It is acceptable to receive gifts. Again, we'll discuss how that can be. It has to be from your blood relatives. And it can be in any amount. We'll provide you the gift letter. And the person that's offering you the gift, they have to be able to provide us and show us where the money's coming from. Your down payment can be in any kind of, savings, checking, stocks, investments, even overseas account. Just please be prepared to provide supporting documentation and show us that you've had the money for the past 60 days. We offer a variety of mortgages, so it all depends on what you like. Our number one loan program, for instance, is our 5-5 program. It is an adjustable mortgage. And the way it works, the rate is fixed for the first 5 years, one adjustment on the 50th year anniversary, and it relocks again for another 5 years. So it will adjust once every five, and it is tied to the 5-year treasury note with a 2% cap. We also offer our fixed mortgages. We understand some people, they like fixed mortgages. They don't want to think adjustable. So again, once we come in connection and in contact, we'll discover what you feel comfortable, and we'll go with that. Michael?
Okay, thank you, Fatemeh. And again, everyone, right after this webinar, please reach out to Fatemeh so you can get the process started. Here we have an estimate of buyers' closing costs. Now, in California, we have what's called customary closing costs. That means county to county, city to city. What may be a buyer's fee in one city could be a seller's fee in another city or county. So this is a fictitious one, but just shows you the fees that will be present. Which ones you pay, you need to ask maybe myself or Fatemeh to send you a who pays what in the counties and cities that you're looking in, or see if you can find it online. Okay, for our sample here, we have a sales price of 1 million, mortgage of 800,000. Loan application fee is zero. Thank you, Fatemeh. She must be paying that. Lender fee, $9.95, flat rate, awesome low cost. Loan origination fee, optional. Points, okay, 1 point is 1% of your loan amount. You may opt to pay a portion of a point, a full point. It changes day to day, usually to pay down your rate. So in other words, if you don't like the rate and you want it to be lower, you can purchase with points and buy that rate down. Now, Fatemeh will walk you through whether or not it makes sense at the time you're purchasing a home. Tax service fee, $119. Make sure your tax is paid on time. Credit report, $55 a person. Appraisal fee, $700. It can be more, it could be less, depending on the size and location of the home. Hazard fire insurance. I put $1,000 in here, but let's remember that California is going through a rough spell right now with insurance. So if you're on or near oak trees, large trees, grass, brown grass, that sort of thing, you're going to pay a lot more for insurance now. So before you make an offer on the home, it would behoove you to contact your insurance carrier and ask them what it would cost to insure the home you're thinking of making an offer on. And sometimes it's difficult to get insurance, so do that right away. Private mortgage insurance, PMI, Fatemeh covers that. Impound account, optional. Okay. I love impound accounts. This is where instead of making your principal, interest, taxes, and insurance payments separately, you can send one payment monthly to Provident and they will disperse the funds accordingly. There's no cost for this. It's a great way to go. I've always done it. Two one-time insurance policy, CLTA insurance buyer policy that insures the title of the property, making sure it's free of liens and encumbrances. Alta title insurance, $1,000, that goes to the lender because they've loaned money on the property. They need to be covered in the same effect. So you have two one-time insurance fees. Escrow fee, that's for the title and escrow company to handle the transaction. $1,200, that's according to the sales price. So as the sales price goes up, the cost goes up, but not greatly. Recording notary fees, $300. Up on the top right, these are the common inspections that we recommend. Termite inspection, $250, covering dry rot, wet rot, pest infestation, and plumbing. Roof inspection covers the condition of the roof currently and what it may need to make it watertight. And we also are looking for life expectancy. Property inspection. This is an all-encompassing inspection where the property inspector, he or she goes out to the property and inspects the property from the top of the chimney to the crawl space, if there is one, underneath the house. And they turn on and off, open and close. They look at everything in the property. Now, they don't open walls, they don't do destructive testing. However, anything that is visible, they will cover. If you have all these inspections, we can sit down and have a discussion on what's going to need to be done in the next 2, 3, 5, or 10 years. Miscellaneous charges, city transfer tax in this fictitious city, $1,650, county transfer tax, $1,100. And if you close, depending what day in the month, you're going to pay interest for those days. So if you're 15 days in, you're going to pay interest for 15 days. Gives us a grand total of $12,701. None of this cost, okay, goes towards your down payment. This is simply closing costs, okay? All right, when I meet with a home buyer, whether they've bought 10 homes or no homes, I'm going to sit down and have a discussion with them. And that discussion is going to be, what are you looking for in a home? What type of home, condo, single family, townhome, etc., and what you would like to see in the home. Now, we know that you're never going to get everything in most cases, but this will help you over time as you look at properties, decide what is most important to you. So we go through a long list. You see on the left, bedrooms, baths, separate family room, separate dining room, etc. as we go down the list. We're going to ask you, is it a requirement? So under bedrooms, what's required? You say 3. We're going to put 3 plus in there. Desire, 3 plus, 4 plus. Required is what you must have. Desire is what you'd like to have within your budget. Neutral, don't really care one way or the other, and don't want is a negative search. And we go through all parts of the home. Really, really important. Now, one area that we do end up spending a lot of time on with most buyers is the kitchen. It's very important to a lot of people. How much cabinet space, how much counter space, open kitchen to the great room, closed off kitchen, galley, so forth. We have a lot of discussion here. People are really, really into the kitchen. So our simple questions, ovens, range, we're simply asking, gas, electric, induction. And then we're going to say how many burners, and we get into really long discussions here. Now, keep in mind that a lot of people are buying homes that are older in the Bay Area. So they're going to talk about remodeling, and we can talk about that too. What does it take to update a kitchen in a home that you absolutely love the location, love everything else about it, but the kitchen's dated? We can have those discussions as well. City, sewer, septic, a lot of properties are still on septic, even in the valley floor. Washer, dryer, that's an important question for people that are buying condos and townhomes. Not every condo and townhome has its own washer and dryer. Sometimes you can install them, sometimes you can't. So, again, a discussion to have when you're looking at condos and townhomes. Single family always has the ability to have a washer and dryer. Okay? All right, the top left, you're going to see roof, really important one. Okay, so if you're buying a home, one of the questions I ask is how long are you going to be living in the home? If you say you're going to live there 10 years, okay, then when it comes to the roof, I'm going to look for a house that has 15 or more years remaining on the roof so you don't have to put one on to sell the home. Roofs are very expensive. Not to say I wouldn't look at a house that has a roof that needs to be replaced, but it would have to be a good purchase price for us to do that. So again, we're looking at life expectancy, not just on the roof, but all these other things too, whether it's siding, foundation, plumbing, electrical, furnace, AC condenser. We want to know the remaining life so we know what we're facing for the number of years we're going to live there. Down at the bottom here, you're going to see HOA. Okay, HOA is really, really important. Whether you're in a single family HOA, condo, or townhome, if there is an HOA, your realtor needs to review that in detail with you because it can come back to bite you. What do they cover? What do they not cover? It's really, really important that you read it. It's a lot of reading, but well worth the time. Your agent can help you by cutting through the red tape and reading the important parts to you. Commuting times. I always like to ask people where they work, where they play, where they worship, where are the schools, family, friends that they're going to visit. Because if we can put you in a place that's going to make it less time on the road for you, we will try and do that in good areas. Okay? All right, types of homes. Most people listening right now are probably looking at either a single family home or a townhome and condo. Single family home, you're the foreman of the ranch. Okay. You take care of everything. It shares no common walls, generally includes front and rear yards, although a lot of the new single family homes have very little side yard attached. Owner responsible for maintenance of property inside and out. That means there is nothing covered. You are responsible. Okay. Maintain, replace, repair. Owner pays all insurance costs. Now, over in the townhome and condos, or CIDs, common interest developments, they usually share common walls, monthly homeowner association fees. The HOA covers exterior grounds and building maintenance. Now, again, you need to read the HOA documentation because saying they cover building maintenance is really semi-true. They're going to cover most of it, but there's things they don't cover. You need to pull out of those documents what they do not cover so you're completely aware of what you're responsible to maintain. The HOA generally pays for the master insurance coverage in their monthly HOA fees. They cover the insurance, the master policy. So in case there's a fire, a truck crashes into the building, they're covering all that. You're going to have a little side fee monthly, and that is walls in insurance, kind of like renter's insurance. And that covers the things that they don't cover in the case of a disaster. And review the financial health of the HOA. That's the second biggest thing, if not the first. So you're looking for what they cover and they don't cover and how healthy they are financially. Okay? All right. Most people ask where do the properties come from that go on the multiple listing service that the realtors use nationwide, and they come from these four foreclosures, lender-owned property, special forms. There's a myth out there foreclosures are a great deal. They're not. They might be, but they're just not based on the fact that they're foreclosures. Okay, they're just a house for sale. I don't look at them any different than any other property. Just because they're a foreclosure doesn't make them a great deal. Probates, okay, anything to do with the legal system, the state of California, if the court systems are involved, you have a probate property. You need to have a very good realtor if it's a probate because there's a lot of avenues probates can go down and you need some experience to navigate that. Corporate transfer, okay, that's where companies relocate one of their employees. And generally, the houses that they live in are in really good condition because they're generally doing really well at the company and they're probably getting a promotion as well as a transfer. So they're selling their home, not thinking they would ever do that, but they've made enough money where they've probably updated the property. I usually find them to be in fantastic shape, a lot of them completely remodeled. And You can ask your realtor to look for relocation properties. It is coded on the MLS and they can search for them specifically. And the nice thing about them is they generally happen September through December. Okay. That's generally when most of the corporate transfers happen. So that's the best time to look for them. Conventional listing, that's just anybody selling a property because it's too big for them now, it's too small for them now, just your typical, I got to move because it doesn't work for me anymore in this property. That's the number one listing on the market. There's more of those than any. Okay. All right, so this is what, when your search is up and running, a listing looks like when it comes to you. Up on the top right, you're going to see all the basics. You're going to see that you have bedrooms, you have square footage, bathrooms, how big is the lot, how old is the home. Do we trust this information? Absolutely not. Okay, none of this is guaranteed. So your realtor will have to verify that the city and county are looking at this property and saying, yes, it is a three bedroom. Yes, it is a one bath, because people add additions, modify without permits, and the appraiser will not give you the value. So in other words, if this was originally a two bedroom and they threw up a wall and made it a three bedroom, your appraiser is not going to give it value for a three bedroom. It's going to look at it as a two bedroom. So you need to verify all that. In addition, down at the bottom, you see the large paragraph. That's public information. That is information that the realtor has the seller sign off on that they can post on the internet, put on flyers. And you have to take everything they say in there with a grain of salt because, after all, they are trying to sell you on the property. Okay? And here's some things that you're going to find in those private comments. On the left, be cautious of TLC. All the property needs is tender, loving care. When we say that, I believe most home buyers look at that and say, oh, it just needs some paint or some carpeting. Usually TLC means it's a wreck. It needs a lot of work, and they're trying to soft sell the condition of the property. Great for first-time home buyer or investor. Usually that means that it's an older home and maybe it needs remodeling, maybe some updating for, electrical or plumbing. Now, a first-time home buyer might find that appealing because they might be handy. They're going to say, you know what? I can update this home. And when I go to sell it 5 or 10 years from now, I'll make more money. Good plan. It works. The investor, kind of the same plan, but a little different take on it. They buy the property, rent as is for the next 5 or 10 years, and then when they get ready to sell, they remodel everything at once. Okay, so those homes are appealing to both of those. Contractor special, fixer upper. Those are properties that are in horrific condition, just horrible. And contractor special, fixer upper, it means it's probably not going to qualify for even a loan if it's in that bad a shape. Okay. Sometimes you'll see cash only because the seller knows it doesn't qualify for a loan because it's in horrible condition. So if you're looking for a property and you have some extra cash, those are great ones if you want to do a remodel yourself. Now, of course, your investor flipper people will be looking at those properties as well. On the right, if you want something that you just want to move in, look for the words recently remodeled, new, renovated, move-in condition. Those will be in really good shape. You may not like the floor plan when you get there. You may not like the neighborhood or the color, or whatever, but at least you'll know it's move-in condition. Okay? All right, you've been looking for properties now, so let's say for a couple months, and you've decided, okay, we're going to cut out these particular geographic areas. We're going to change the fact that, we don't need a family room anymore because it was too expensive for us. In other words, you've adjusted your home search to meet your budget and your likes. And when you're there and you have those geographic locations, you got rid of the ones you decide you don't like, you need to really step it up. You need to look at homes 24 hours a day, 7 days a week, or as best you can. Homes do sell in a day, in 2 days. It happens all the time. So you need to be able to really get out there as soon as possible and view the listings ASAP. Try to meet the owners of the homes you view. The owners are starting to more and more stay in the homes now when the properties are on the market. When COVID occurred, everybody was out of their property. Nobody stayed in their property when the homes were being shown. They'd moved first. Well, that's starting to go the other way. More and more people are staying in their home. If that's the case on the property you're looking at and you like that home, try and make an appointment when the owners are going to be there so you can meet them. You can say hello, give them your names. have a little chit chat with them. Then when the offers come in, if you're the only person that has met them and there's 4 or 5 offers on the home, you stand a real good chance of getting a response. Look in, under, and over when viewing a home. Yes, there's inspections, but take your time. Take your time, go through it, really look at it. Move shoes before entering a home. I put that on there because, again, since COVID, it's become almost, 90% of the homes require that you take your shoes off. So I just prep all my buyers for that. Do not bring a crowd when viewing. When you first look at a home, it's you and your realtor. When you want to show somebody else, bring family, friends, and coworkers on a second viewing. You don't want them there in the original viewing because it dilutes the whole process. Okay? Okay, when you're in the home, couple tips. Don't make negative comments about the home you're reviewing. Just assume that every home has a camera in it and somebody's watching you from a computer at work, probably. And they see you come in, they hear everything you say. And the reason I say negative comments is people make negative comments about houses they like. They might say, "Hey, Mike, what does it take to tear down this wall between the kitchen and the living room and make it an open concept?" And we can talk about that. But you know what? Home buyers might not like that. They just remodeled that kitchen 5 years ago. You want to tear it down? They remember those comments. So I always ask my buyers, bring along a notebook or on your phone and just make some notes that you want to ask me outside. Assume there is a camera because most houses have them now. Again, don't bring a crowd when viewing a homes. Sellers don't like it either, on the first visit, that is. I always let the agent, listing agent representing the seller know when I'm going to bring a crowd of people. I'm saying, hey, they want to show their family and friends the home just to prep them for that. Okay, don't use bathrooms in homes you're viewing. We're not supposed to use those bathrooms. And a lot of people think, oh, it's a vacant home. I can use it. Well, vacant homes, sometimes they shut off the plumbing. So probably not a good idea. Just keep that in mind. Okay. All right, so I do what's called a second look. So when buyers tell me, let's say we've shown the home and we're standing in the driveway now chit-chatting, and they say, we really like this property, Mike. Can you get the inspections on it? And we'd like to take it a step further and get us the comparative market analysis, which we'll cover in a minute, and we can see what we think the value is. I say, sure, but before we do that, since we're seeing maybe 5 homes or more today, let's go back into this one since you do like it and take another slower walk through. Let's turn on and off, open and close cabinets, doors, everything. Okay, walk through the house a little slower because if you're going to make an offer, you don't want to miss something and you really need to take this second walk through. So if you think you might write an offer on this one, take another walk right through the home. Okay. All right. Comparative market analysis. I know this is ugly looking, but what we have here is activity in a certain neighborhood. And usually we go back 90. Recently, I've been going back 125 days because there's fewer sales. So sometimes I can't get the number of sales that I need to make a market analysis. So we like to use data from the same geographic neighborhood, same schools, bed, bath, square footage, as close as we can get. Really, really important. So we found a house we like in the neighborhood, and apparently in this neighborhood, it was Shoreview Avenue at the very top because that's active. There's only one. Then we have sold listings down on the bottom, okay? And luckily for us in this neighborhood, they're all about the same square footage, similar lot sizes, and we've got 3 sold properties. So behind this, what you don't see after this cover page is we'll have photos of the inside of all these homes and the outside. We'll have maps showing you the neighborhood. We're going to know if it's a busy street, if it's a corner property, if it's a cul-de-sac. And we're going to see all those pictures and we're going to compare those pictures to the one we're looking at. How does the kitchen compare? How do the baths compare? What about the yard, the landscaping, the street, busy or quiet? And then based on that, we have a window of value. We have a high sale, a low sale, and everything in between. And that window of value, we're just simply trying to match the house that we're thinking of making an offer on as closely as we can to one or more of the homes that sold. If we do that and say these 2 or 3 are very similar, then we have a good appraisal value to support. our purchase. So by having this, we're looking at the same information the appraiser is looking at, and we're just heading off any problems with the appraisal. Because when you do make an offer and it's accepted, your lender is going to send an appraiser out, and they're going to want to find comparable sold properties to give it the value that you're offering. If you're offering more than the recent sales, there needs to be a reason. Maybe market is heated up. Maybe it's got a bigger lot, better landscaping, brand new roof. Could be all kinds of things. We get into that detail. Okay. Okay, this is a purchase agreement for the state of California. I simply show it to you because I'd like you to get a copy of a purchase, a sample purchase agreement from your realtor, and you need to review this when you're not looking at properties, meaning you're not really making an offer. You should review this when you have time. It looks intimidating. It's a lot of pages. When everything is sent to you, it's like 30 pages, okay, of all the addendums in the sample purchase. And it looks intimidating, but if you read it, you'll quickly realize it's just really asking you questions. What are you offering? What are you putting down percent wise? What's your loan? Who's it coming from? What's the interest rate? Blah, blah, blah. And you fill this whole thing out. You don't, your agent does. And you really want to make sure that they have the most recent revision date. Now, the only reason I have this still in here is I've been doing this so long that I still come across people that are doing it the old way, handwriting it. And if they're handwriting it, you want to go to the bottom right to look at the revision date. Make sure and check with your agent that it is the most updated revision. If they're doing it on the internet, it will be updated. It will be correct. If you're working with a new agent, okay, nothing wrong with that. Just make sure anything they ask you to sign, purchase agreement, addendums, etc., that the managing broker or training broker of the office has reviewed this information. Again, if you go to the bottom right of the front page of any purchase agreement, you're going to find a little place where it says reviewed by. Make sure that that's been initialed by that person in the office. And you're going to talk to your agent about any contingencies. And contingencies are simply saying, I'm offering X contingent upon. So in my examples here, I've got an inspection contingency. You didn't like their inspections, they didn't have the right inspections, whatever the case may be. You may want an inspection contingency. Financing contingency. You're not going to need that to go with Fatemeh because you're going to be fully approved. And lastly, we have appraisal contingency. Now, the appraisal contingency is something that if you say I want an appraisal contingency, if the house doesn't appraise for the value that you've offered, okay, you can back out of the agreement. If you don't have that and it comes in for less, then you as the buyer are on the hook to make up the difference between those two amounts. It could be through the loan, it could be extra cash down, whatever the case may be. This is a discussion to have with your agent on each and every property. FYI, I would say 90% of the offers I have had accepted in the last 10 years have had zero contingencies. Not all of them, but it's the vast majority. To have that sort of confidence, you need to be out looking at homes, see what they sell for, have that kind of confidence that you know this house will appraise. And that's through the comparative market analysis. If anybody would like a sample purchase agreement, shoot me an email and I will send you one. I'll send you the CAR. The CAR and the PRDS are the two purchase agreements that we use around here. Probably most areas use CAR, but some areas, for instance, usually it's like San Mateo County and North, are using PRDS. Okay, both are good. No problem with either one. Just let me know if you want one. Okay. Okay, offer process. You found an offer. You and your realtor will decide what to offer. To make that more clear, we'll go over the CAR. I will tell you where I think, this is the way I do it. I say, I think it's going to sell around this price, but that doesn't mean you have to offer that. You may say it's not worth that to me, and that's fine. You're buying the house, I'm not. Discuss possible contingencies in offer, which we just covered. Your realtor will present the offer. You do not go to the presentation, and usually the presentation is over Zoom call. Seller will respond by accepting, rejecting, or countering your offer. You can accept, reject, or counter the seller's response. In my experience, I've only gone back and forth in countering process. Usually, I'd say 90% of the time, it's one counter. Okay. And we either accept it or we don't. I've gone back and forth three, maybe four times in my entire career. It usually doesn't go that many times. Okay. All right. So you're looking for a realtor. Well, questions you can ask. How long have you been doing this? Again, as I pointed out earlier, new agents doesn't mean they're bad. It just means you need to make sure that their work is being reviewed by someone of experience in the office. You can ask them, how many transactions did you have in the previous year? How many were sellers? How many were buyers? You can ask those questions and they can even print it out on the MLS. It's all public information. And first-time homebuyer knowledge. If anyone out there listening is a first-time homebuyer, remember this. First-time homebuyers require much more time, much more hand-holding, and for them to have the confidence to move forward and make what could be their largest purchase in their life. So they're scared, and they should be. Okay. So ask your agent, hey, we're first-time homebuyers. We're going to require a lot of hand-holding and a lot of extra time. Do you have that time? And a good agent, if they're super busy, will say, no, I don't have that time right now, but here's someone that might be able to help you. So, really important that you ask that. And during your meeting, you want to establish goals, okay? Like, how often are we going to go out? You're going to have strategy, okay? Strategy simply means, are you prepared to make an offer? Do you have your loan lined up? Are you prepared to sign, ASAP when we find a house? And the timeline. Every 2 weeks, review your home search with them. Change the filters if your likes and dislikes have changed. And they do, they will change. You should be adjusting that home search filter. Okay. All right, your offer's been accepted. Congratulations. Now, you are the CEO in this example right here. You're in escrow. It's got 30 days, let's say, to close. That's kind of the average. Okay. And you're the CEO at the top. And like any good CEO, you have no clue what's going on. And you're depending on the people underneath you to do the real work. And that would be all of us, your realtors, your lender, the title company, the appraiser, the inspectors, all of us. And we're going to be, during this period of 30 days, we're going to be sending you information for you to sign, and we're going to be going through it with you. Your job is to listen, understand, and ask questions. Okay. And at the end of that 30 days, you move into the home. And as Fatemeh said, it can be really short. It could be 10, 15 days escrow. It could be a 60-day escrow. It really depends on the seller's needs because you're going to try and accommodate whatever the seller wants to get your offer accepted. And in the time period, you will be reviewing all the documentation and signing off on everything. Okay? All right. So every day that I wake up, this is what I look at. And you probably can't read it. So I can barely read it myself. It's just my computer screen. And it's telling me that starting with 0 days, meaning it's due today, okay, to 1, 2, 3, 4, just goes on and on. Number of days, tasks that I need to have completed to keep all the escrows rolling smoothly. So it's really, really important that we adhere to those days because we can be in trouble if we don't do what we said we were going to do in the purchase agreement by a particular day. So you need to remain very available to your agent, title company, lender, etc., when they have questions or documents that you need to sign. Okay? And you get to the moving day. Okay. There used to be dancing people on here, I believe, when we had the moving day, but apparently they're not dancing anymore, but they're still happy. They're in their house. If anybody would like a purchase agreement, reach out to me. If anybody would like to take this seriously and get going, contact Fatemeh ASAP. And if anybody needs a realtor recommendation anywhere in the United States, I have a list of every licensed agent in the United States. And if you tell me you need to look for a condo, a townhome, a single family in whatever city or county in the United States, I'll look up who the top performers are in there and I'll send you their contact information. Okay? If anybody has a question about the Bay Area, you can reach out to me and I'll be happy to answer any questions you have. You can at this time as well. Um, I guess we have it in chat. Do you see any questions, Fatemeh?
I actually do not
I have
see any.
one question.
Okay.
Um, is the seller required to respond to an offer? What if they don't respond? Can you make a second offer?
Yes, they are not required to respond, but they do have to, if you want evidence, their agent, there's a place to sign on an offer that the sellers have reviewed it. Okay. And that way you know the offer was presented. But no, they're not required to respond. I've had offers that sellers look at and go, I'm not even responding to that. It doesn't meet our needs for whatever reason. And yes, you can make another offer. Absolutely.
Looks like there's no other questions. If you guys do think of any questions, you could always reach out to Fatemeh and Michael. Here's their contact information. And again, we'll be emailing everyone a copy of the slide deck with their contact information within a week. So thank you everyone for joining us today and enjoy the rest of your day.
Thank you,
Thank you.
everybody.
Thank you, everyone.